Hello, welcome back to Miss Finance. Mine's Rebecca, and on this channel I go through all things accounting, finance, investment and Excel related. And all that I ask in exchange for this free information is that you share the video with anybody who can use it, subscribe to the channel and watch it to the end, because YouTube promotes videos that have the most retention to other viewers. So if you watch it all the way to the end, it just helps the channel grow a little bit more. But otherwise, let's get straight into the video. So today we're going to focus on the AAT Level 2 Synoptic and the sort of questions that you might be asked in there. So we're just going to go through a few examples here. So in this question here, we're being told that we are preparing accounts for month end for our clients. And in the task, we need to transfer data from the sales daybook to the ledgers. So we've got an extract of the sales daybook, as you can see here. So we've got a date, details of perfume sales from an invoice, we've got the net, VAT and total. So what we're being asked to do here is show how each of those entries will be shown in the general ledger, and we're also being asked how this would appear in the sales ledger. So what we need to do is, with sales, if you didn't already know this, sales are basically a credit in the income statement or profit and loss account, and they are a debit on the balance sheet. And the reason that they're a debit on the balance sheet is because they're an asset. So a lot of the time, customers don't tend to buy in cash. They don't tend to give you the money that day. They tend to buy things on credit, specifically if they are a big business. So they might have terms of 30 days before they go ahead and make a payment towards something that they've purchased. So for us, the way that we record that is by crediting sales in the income statement or the profit and loss account and debiting the sales ledger control account. And you might see that referred to as the debtors control account as well. So when we're going to record these entries in there, sales is going to be a credit and our total is going to be a debit. Now VAT is also going to be a credit, and there's a reason for that as well. So VAT on sales is what we call output VAT. So it's essentially VAT that you're collecting on HMRC's behalf, and something that later down the line you will then pay back to HMRC. So where my entries here are to credit the VAT control account and to credit sales, debit the sales ledger control account. When I then pay that money over to HMRC, the entries in the bank are going to be to credit the bank as a payment to HMRC and to debit the VAT control account to clear this down. So that's the reason behind that. So how will this appear in the sales ledger? So we're going to have the details of perfume sales up here. Our value is going to be the total, and that is going to be showing as a credit. So let's move on to task 2. So here we're preparing accounts for month end for our clients again. This time we're having a look at the purchase daybook, and we're given the extracts there where we've got our date, our details, invoice again, net, VAT and total gross. And we need to show how these entries will show in the general ledger. So if you ever struggle and remember the difference between purchases and sales and how they're recorded, purchases are essentially a cost. So when we're recording costs into the income statement or the profit and loss account, what we're doing again is we're going to go ahead and debit purchases in the profit and loss or income statement. And again, similar to how large businesses don't tend to pay for items that they've purchased that day, this business is not going to do that either. So they're going to purchase these items on credit. So we would then credit the purchase ledger control account. And again, the reason behind that is because that's a liability that's sat on the balance sheet because it's something that you owe to somebody else, so another business. So when we're recording this in the general ledger, our purchases are going to be a debit, VAT is going to be a debit, and the gross amount is going to be a credit to the purchase ledger control account. Now if we didn't do that, first of all, that journal would not balance, and secondly, the reason why we do that again is because we want to record the entire gross payment in the purchase ledger control account, simply because when we make a payment, the entries there are going to be to credit the bank and debit the purchase ledger control account, and that's going to be at gross because we pay the supplier the gross value. Now in terms of the VAT, the reason why that is shown as a debit is because any VAT on purchases that we can reclaim back will be shown as an asset effectively on the balance sheet because it's money that we can recover back from HMRC. So say if we only had VAT on purchases sat in the VAT control account, the entries on the bank side would be to debit the bank and credit the VAT control account because that would be money that we would receive back in from HMRC. So next let's have a look at how this would appear in the purchase ledger. So here we would have the details as shown above, the total which is the 600, and then this is going to be a debit. So let's move on to task 5253. So we're working through our client's month-end bookkeeping workings and we found an error. And it seems that a check has been posted incorrectly. So this is obviously a receipt, so a check from a customer, and it should have read 5201, but it's been posted as 5253. So the original journal to record the above has already been posted by the bookkeeper. So they've posted the incorrect amount. So what we need to do first is just remove that wrong entry. So if I was posting this initially, what I would be doing is I would be debiting my bank and crediting my sales ledger control account to reduce the amount of debt that's owed by customers in my sales ledger control account, and to also record the receipt from that customer. So what they have done again is to debit it. So they've actually debited 5253. So in order to get rid of that journal entry, I'm going to credit the bank and debit sales ledger control account, so that our sales ledger control account doesn't show that any receipt has been received, and our bank doesn't show that either. And then we're going to post the correct entry here. So in the bank, we should have 5201, and we're going to reduce the sales ledger control account by 5201 as well. So I hope that makes sense there. So I hope you found this video useful. Please do consider subscribing as always, and I shall see you on the next video.